Hi guys, this is Alan from Hirose Financial. Welcome to Friday, and that means it's our Forex corner. For Forex trading up until now, I have talked about a lot of basic knowledge on Forex trading. I think it's about time for us to get into the actual trading to see how we use strategy, how we aim for profits. But before that, there's one last thing I want to talk about, which is the type of orders in Forex trading. There are two types of orders in Forex trading, which are the market order and a pending order. Up until now, I have talked about a lot on market order, which is a trade, which is a order that you execute with the current price. But then we do have another type of order, which is the pending order. So for pending order, we do specify a price, and then when the market gets to this specific price, then the order is going to be executed, and then you will enter the market at that time. For today, we will take a look at what is pending order and how we will help us to manage our trades in the Forex market. Now let's get started. There are a lot of types of pending order in the Forex market, and it's actually a pen in the S. Just stay with me, and then I just hope that my explanation can help you to understand more on the types of pending order in the Forex market. There are two types of pending orders. Which are the stop orders and the limit order, and then down under the stop order and limit order, we do have another sub category. So we do have a buy limit and sell limit, and we have a buy stop and sell stop. So now for today, we'll take a look at these four types of orders. First we will take a look at stop orders. Stop orders, there are two ways for you to use the stop orders. So the first way is to enter a market, to make a new order, and then the second way is to exit a existing order, so to close that order to control loss. That's the two ways that you can use the stop order. For stop order, we have buy stop and sell stop, and then for buy stop, we set it to a price that is higher than the current price, and for sell stop, we will set a sell stop price that is lower than the current price. And this is where it gets confusing. Stay with me, and I try to explain it to you clearer. Let's take a look at the first purpose first. For stop order, the first way that you can use stop order is to enter a market. People actually use the stop order to trade breakouts in the Forex market. We will take a look at a few examples on how do we use stop orders to enter a market. Let's say I trade with US dollar and Japanese yen. Let's say the price now is 110. Then if I predict that, if my analyst tells me that the price is gonna go up when it reach to 113, then I will set my stop price, the buy stop price, at 113, which is higher than the current price. So the current price now is 110. Now when the price reach to my buy stop price, then my order is going to be executed. Then that's how I enter the market with a buy stop order. Next, on the other hand, we have a sell stop order. Let's say again, the price for US dollar and Japanese yen now is 110. So now, predicting that the price is gonna fall when it reached to 107, then I will set my sell stop price at 107, and then well, which is lower than the current price. So when the market gets to my sell stop price, then my trade is going to be my order is going to be executed. Then that's how I enter the market with the sell stop order. So this is one way that you can use stop order, which is to make a new order to enter a market. Okay, so well, now we will move on to the second way that we're gonna use stop orders. So well, this is where things get a bit complicated. So well, stay with me. I try to make it clear for you. So well, the second way for us to use a stop order is actually the same as stop loss. So we will execute a stop order to control our loss and to exit the market. So let's say I have a short position on US dollar and Japanese yen. So that means that I expect the price to go down, but then in reality the price goes up. Then at this moment I need to stop the loss. So I will need to place a buy stop order. So let's say the price is now at 110 again. So and then it goes up. Then I want to stop the loss at when the price gets to 113. Then I will set this 113 as my buy stop price. So which is higher than the current price, the 110. That's the current price. So when the price rise up to 113, then my buy stop order is going to be executed, which is against my short position, and then the short position is going to be closed, and then I will be able to control my loss by executing a buy stop order. So that's one way we use the buy stop order. Okay, so well, now we move on to the sell stop order. So now let's say I have a long position, so that means that I expect the price to go up, but then in reality the price falls. So at this moment I want to exit the market by using the sell stop order. So let's say that now the price now is at 110. Then if it falls, then I will set the I want to control my loss at when the price falls down to 107. Then I will set this 107 as my sell stop price, which is lower than the current price. The current price now is 110. So when the price falls down to 107, then my sell stop order is going to be executed, and then that's going to help me to close my long position on US dollar and Japanese yen. And then by doing that, my loss is going to be able to control my loss, and then that's how you use your sell stop order to against your long position and to exit the market to control your loss. Okay, so well, that's all about stop orders. So well, I know it's confusing. Play back the video a few times and then just try to get the idea on stop order. And for now, let's move on to the limit order. So same as stop order, there are two ways that you can use the limit order. So which you can use it to enter a market to make a new order, or you can exit the market. You can use the limit order to exit the market to secure profit. So again, same as stop order, so there are two types of limit order, so which is a buy limit and sell limit. So buy limit, we will set the limit price that is lower than the current price. And on the other hand, for sell limit, we will set a limit price that is higher than the current price. So we will take a look at a few examples and see how the limit order works. And first, we'll get to the first way, which is to use the limit order to enter a market. Okay, so well, we will take a look at a few examples to enter a market by using the limit order. So well, we will take US dollar and Japanese yen as an example again. So well, now let's say the price is at 110 again. So now the price falls down, then expecting my analyst tells me that the price is gonna bounce back up when it reached to 107. Then I will set this 107 as my limit price. So well, which is lower than the current price. So the current price now is 110. So when the price falls down to 107, then the buy limit order is going to be executed, and then that's how I use buy limit order to enter a market. So on the other hand, we have a sell limit order. So that's really similar. So well, now let's say the price is at 110. So I expect my analyst tells me that the price might falls down, might bounce back down when it rises up to 113. Then I will set this 113 as my sell limit price. So when price rises up to 113, then my sell limit is gonna be executed, and that's how I enter the market at 113, which is higher than the current price. So this is one way that you can use the limit order. Alright, so well, now let's take a look at the second way that we can use the limit order. So the second way for us to use the limit order is actually the same as take profit. So we will use the limit order to exit market and to secure profit. So now we will take a look at a few examples, and then we will try to understand how do we use the limit order to secure profit. So let's say again I take US dollar and Japanese yen as an example. So let's say I have a short position on US dollar and Japanese yen. So I expect the price to go down. Then in reality it really goes down, and then now I want to secure my profit. So in order to secure my profit, then I will place a buy limit order that is against my short position. So let's say I want to secure my profit at when the price drops down to 107, which is lower than the current price of 110. So if I set this 107 as my buy limit price, then when the market gets to 107, then a buy limit order is going to be executed, and that is going to help me to exit the market and to secure my profit. So that's how we use the buy limit order to secure profit. So next we will take a look at sell limit. So let's say I have a long position on US dollar and Japanese yen, which means I expect the price to go up. And well, it really goes up, and then now I want to secure my profit. So let's say I want to secure my profit at when the price gets to 113. Then I will set this 113 as the sell limit price. So well, which is higher than the current price of 110. So when the market gets to 113, then a sell limit order is going to be executed, and then it will help me to exit the market and help me to secure the profit that I already have. So this is the second way that you can use the limit order, which is to exit the market and to secure profit. Well, I know it's quite confusing on all these types of orders, so just play back the videos for a few times and get a rough idea on what this orders does and how it will help you with your trades. So well, that's it for today, and for next week we'll actually we'll set up these orders on the MT4 platform, and then we will be doing a review on the order types as well. So just follow the video on next week on Friday, and then we will take a look at how do we set up these orders. So okay, so well, that's it for today. If you like my video, give me a like and subscribe to my channel for more live trading video. And I will see you soon again next week. Bye.